Understanding price action, the market's language. Price action is the movement of a cryptocurrency's price over time. We observe this movement on charts. Many traders believe price action tells a story about buyers and sellers. By learning to read this story, traders can make more informed decisions. Price action analysis does not rely on complex indicators. It focuses purely on the price itself. This makes it a clean and direct way to view market activity. Cryptocurrencies are known for their volatility. Understanding price action helps traders navigate this volatility. It provides clues about potential future price movements. This is not about predicting the future with certainty. Instead, it is about identifying probabilities. Traders use these probabilities to manage risk. They also use them to find potential entry and exit points for their trades. Price action reflects the psychology of market participants. Patterns in price action can reveal shifts in sentiment. Observing these dynamics is key. Ultimately, price action forms the basis of most technical analysis. For many successful traders, price action is the most important tool. Support is a price level where a falling price tends to stop and reverse. Think of it as a floor for the price. Resistance is the opposite of support. It is a price level where a rising price tends to stop and reverse. Think of it as a ceiling for the price. Support and resistance levels are often found at previous highs and lows. Trends describe the general direction of price movement over time. Candlestick charts are a popular way to visualize price action. Each candlestick represents price movement over a specific time period. A candlestick has a body and often wicks or shadows. The body shows the range between the opening and closing price. If the close is higher than the open, the candle is usually green or white, which is bullish. If the close is lower than the open, the candle is usually red or black, which is bearish. The wicks show the highest and lowest prices reached during that period. Many candlestick patterns can signal potential price reversals or continuations. Bullish reversal patterns suggest a downtrend might be ending. An example is the hammer. It has a small body at the top and a long lower wick. Another is the bullish engulfing pattern. Here, a large green candle completely engulfs the previous small red candle. Bearish reversal patterns suggest an uptrend might be ending. A shooting star is like an upside-down hammer. Another is the bearish engulfing pattern. Section 4, Real-World Crypto Bitcoin and Ethereum Price Action Examples. Let's look at Bitcoin for an example of support and resistance. In early 2023, Bitcoin found strong support around the $25,000 level. The price tested this area multiple times. Each time, buyers stepped in and pushed the price back up. This created a clear support zone. Later in the year, as Bitcoin's price rose, it faced resistance near $45,000. This level had been a significant point of selling pressure in the past. Observing how Bitcoin reacted at these key levels was crucial for traders. When $45,000 was eventually broken, it acted as a new support level for a while. Ethereum has also shown clear trend behavior. For instance, during parts of 2024, Ethereum exhibited a strong uptrend. We could see this by observing a series of higher highs and higher lows on its daily chart. Traders could draw an ascending trend line connecting the lows. As long as the price stayed above this trend line, the uptrend was considered intact. When Ethereum pulled back to touch the trend line and then bounced, it offered potential buying opportunities. Candlestick patterns frequently appear on Bitcoin and Ethereum charts. Imagine Bitcoin is in an uptrend and approaches a known resistance level. If a shooting star candlestick forms at that resistance, it's a bearish signal. Consider another example with Ethereum. Suppose Ethereum has been in a downtrend for several weeks. Section 5. Practical Tips. Using price action effectively as a new trader. For new traders venturing into crypto, patience is a key virtue. Do not rush into trades. Spend time observing price charts. Watch how prices react around key levels. See how different candlestick patterns play out. Start with paper trading, which means simulating trades without real money. This allows you to practice identifying patterns and managing hypothetical positions. This builds confidence and helps you understand market dynamics without financial risk. Start by analyzing price action on higher time frames. For example, use daily or weekly charts instead of 5-minute charts. Higher time frames tend to filter out a lot of market noise. Support and resistance levels are often more significant on these charts. Trends are also clearer and more reliable. While shorter time frames can offer more trading opportunities, they are also more volatile and harder to interpret accurately for beginners. Mastering price action on higher time frames first will provide a solid foundation. While price action trading can be done with clean charts, some traders combine it with simple indicators. For example, you might use a moving average to help identify the trend. Effective risk management is absolutely essential in crypto trading. Price action can help you set logical stop-loss orders. Protecting your capital is the most important rule for long-term survival and success in trading. Section 6. The Path to Mastery Continuous Learning in Crypto Markets. The cryptocurrency market is incredibly dynamic and constantly evolving. New projects emerge, technologies change, and market sentiment can shift rapidly. Therefore, mastering price action is not a one-time achievement. It is an ongoing journey of continuous learning and adaptation. What worked well last year might not work as well this year. Traders must remain students of the market. They need to be curious and always willing to learn new patterns, strategies, and nuances of price behavior. Stay updated with significant news and events in the crypto space. While price action analysis focuses on charts, external factors can heavily influence prices. Major regulatory announcements, technological breakthroughs, or security breaches can cause sudden and large price movements. These events can sometimes override typical price action patterns. Being aware of the broader market context helps you understand why the price is moving in a certain way. It can also help you anticipate potential volatility. This awareness complements your technical analysis skills. Don't be afraid to review your trades, both winning and losing ones. Keep a trading journal, record why you entered a trade, what price action signals you saw, and what happened. This self-reflection is a powerful learning tool. Losing trades are not failures if you learn from them.